So we'll see if there's good light up here for the older eyes that don't do much reading anymore without glasses. But I'd like to also welcome to the stage our panelists. We have Ken Zuckerberg from CoBank. We have Mark Vetter from AgCountry, Matt Erickson from FCS America, and Jim O'Brien from Agrograph. So these gentlemen have been given questions. We'll see if I can stick to the script and not mess them up much. This one for you. And one for you, Matt.
Thank you. Jim and I usually sit together, so we'll have to see if this works.
This is awkward. Sharon, they'll love seeing
friends
here.
up here.
Okay, so we are not going to go into long introductions because we feel like we don't have enough time to spend a lot of time on backgrounds for each of these gentlemen, but they are definitely connected with agriculture and finance. And we're looking at how do we move into the future, and different farms are in different transition areas, and just relationship building. I think that we, for a while, went away from where some of the banks decided we didn't really need relationships. We just needed to sign a piece of paper and then you'd have your money. So one thing that I thought was very interesting, I opened up my email the other day and the heading read, U.S. farmer sentiment in May drops to lowest level since July 2022. And I thought we could bring that into the thought process this morning. I'm going to just start right down the line and we'll go the opposite way for the next question. But the first question is, what are your organization's risk management strategies for your customers who face rising interest rates, low commodity prices, labor shortages, and higher input costs? And I would say rather than the low commodity prices, as a farmer, I think of it more as a very up and down market where we're trying to, not always hit the exact high, but we sure are upset when we miss it too. So what two things would you recommend to farmers? Jim, we'll start with you.
Great, thanks, Vanessa. So as I thought about this question, my first thought was, what are the two strategies? The first is be open to discounted services, and the second one is be open to technological requests. So what do I mean by that? I'm going to start with a rhetorical question that I'll, of course, answer myself, is, why does barter still exist, right? I have a vase, you have a chair, I need a space to sit in, you do something to put your flowers in. We don't need to exchange any monetary value, but we do need to exchange UC value in each of our different items. And that's why, if you can clearly state out what this risk exchange is, people will do that. And what you're seeing in the B2B risk management side is discounted services and technological requests are part of the table stakes. And if you look across the industry, and I'll use an example because I used to work in the property and casualty insurance industry, and you look at an automotive insurance, I like cars, and like this UBI, this usage-based insurance. Most all the insurance companies have them now, some program. And essentially, you put a device in your car, and it tracks you, and it tells you how well you're driving, with the hope that you get lower services. And it turns out that TransUnion, the credit company, did a survey, just came out in May, and they interviewed all the customers and all the different programs, and what they found was about 2/3, about 64% of the folks in the program have stuck with it, and they found value. Like, they turned out they were a safe driver, and they got better rates. That other third found, maybe something they didn't like to hear, that they weren't as good as a driver as they thought. They had increased rates. The rates went up, and then they also didn't like the technological burden, like having this big brother approach there. So it's one of those, if you can clearly state the value, people will sign up for it. My other example, again, using another industry, is looking at stock. And if people heard me talk, I've mentioned this before, if you look back in the early 90s in stock brokerages, you needed to go through a broker. It was $100 a trade, and it took several days to do it. Well, along came E-Trade and Ameritrade and Scottrade, and they said, hey, we'll do the same thing for you for $10. But you have to exchange some value. I mean, you need to take the risk on of making those trades, and you need to do it yourself. And it turns out that millions of people did that. So I think coming back to being open to discounted services and technological request is really going to be kind of that future of what's are the table stakes of technology. So.
Thank you. Matt,
Yeah,
I'll give you the same opportunity.
Thanks, Vanessa. So welcome, everyone. My name's Matt Erickson. I'm with Farm Credit Services of America and Frontier Farm Credit. You know, Vanessa, this is a really great question. And I think when we look at the markets from, over the past couple of years to what we're seeing today, I think it's pretty, clear that some things we're turning from a bullish environment now to more of a bearish environment as things get lower on commodity prices. But when I look back at this, a lot of my perspective is going to be what we're seeing on our farm. We've got a farm in northwest Indiana, a small town called Brookston. We've got corn, soybeans, popcorn, and hogs. And one of the things that we've transitioned with our farm is, one, being intentional with our risk management strategy in a time of low commodity prices. And what I mean by that is my dad, my brother, and I, we get in a room and we decide, all right, so this is what we think is happening in the market. One, we follow the markets every day. But also, two, risk management, it helps us set kind of a floor towards those bad times that we can utilize to protect our farm. So I think that's first and foremost. The second one is understanding our costs. And what I mean by that is we develop our books, we know our margins, they're variable. Like I always say, a pencil always has an eraser. We manage our books and understand our margins very clear and very concise. And I take that with my job at Farm Credit and help our customers with regard to some of those costs and some of those things. But piggybacking off of that is, linking technology in terms of not cutting your costs, but optimizing your costs. And what I mean by that is, we utilize precision technology in terms of, it does cut our costs, but it optimizes our costs. So let's say for fertilizer, we don't put any additional fertilizer than we don't need. And a lot of that is because of technology and the use of optimization. So I think, between those three things, we are going through a transitioning within the ag economy here a little bit. But yet again, there's strategies that we can help kind of offset and kind of hedge some of those risks.
And so advice to your customers?
I would say be resilient, really follow the market, utilize technology in terms of helping to cut your costs, but also to optimize your costs and optimize the resources that you have on your farm.
Okay, Mark?
Thanks, Vanessa. Mark Vetter, Senior Vice President at AgCountry. My role, my entire career has been customer facing. So I get to sit across the desk from Vanessa, and we really get to solve these real world problems, commodity markets, this interest rate environment we're in. And something AgCountry really pushes is develop that relationship and trust so you can get buy-in on both sides of the desk to solve those problems. As you think of the COVID-19 pandemic, fixed interest rate costs were at record lows. A lot of operations were able to lock in their land notes, machinery notes, have them in a good position today. Some didn't. My recommendation to those producers, fixed interest rates change daily. There will be opportunities, recession, downturns in the stock market, all things can affect fixed interest rates. So get a relationship with a lender that has that product and have a plan in place for when we get into that position. When you look at the last 12 months and where interest cost is up about 5%, it'll really put you in a risk-averse position compared to floating interest rates. When you think about that line of credit, that operating loan, the liquidity for your farm, there's always going to be risk there because of the structure of that loan. It's going to be an interest rate that goes up or down. So best advice you can have there, we've had some great years in ag. Liquidity is quite high. Manage that liquidity on the backside so your operating loan stays at a reasonable size for the scope and size of your operation. So marketing, labor was in your question. Major shortage out there. People cannot find workers. My best advice, Vanessa, for that, know your farm's cost of production. I've heard countless times, Mark, it is so hard to sell $5 cash corn right now because 12 months ago, I was selling $6.50 cash corn. The question you got to ask yourself is, how much am I making over my cost of production at $5 cash? If you're still at 15, 20% return, maybe that isn't such a bad spot to lay off some risk. It will really help you bring clarity and management to your operation by knowing those numbers. You bring it to labor. There's technology out there, Vanessa, that will make the farm's labor much more efficient. They can put a lot more hours in the field in a day when you have auto steer driving your tractor, whether you're focusing on that row all day long, and just many things that can help us get more hours out of our labor. And those costs are $1, $2, $3, $4, $500,000 to make a single investment. Know your costs in your earning streams so you can apply that to making that decision on your farm. And from what I see, the operations that have a great handle on these costs and earning streams are very progressive in this environment, and they're really moving their farm forward compared to the ones that are maybe just guessing a little bit. They're just kind of going by the wayside. So,
Thank you.
So there have been a lot of really good points here. I work for CoBank, and let me just explain. CoBank has the pleasure to lend money to others in the farm credit system that lend directly to farmers. So to answer your question on what we're doing for customers, I'll put that aside and Vanessa focus right on the farmer. So let me start with the conclusions and then work backwards. But there's more than two recommendations. The broad conclusion recommendation would be, you need to be a portfolio manager of your own farm. Second, you need to change your mindset to embrace the business and the dynamics around you. So let me unpack that a little bit. And first, let me also say thank you to every farmer in the room for what you do. God knows I would never farm if somebody told me what to do every single day of the week. I would let them do it, and I wouldn't I wouldn't deal with it. But the mindset. Okay, so I spent 12 years, I think, on Wall Street, 12 or 15 years, and then another 10 managing money. And what did I learn in 25 years of managing investments? That the secret to investing is there is no secret. The secret really is make as few mistakes as possible. That sounds a lot like crop farming, right? So making as few mistakes as possible means that if there's technology available to reduce the variability and volatility of farming, then embrace it. The next thing is, on a good day, I trust maybe 5 people, most days 3 people, very much like the American farmer, right? So therefore, do not run your operation thinking about that if you run it with if the philosophy of the government will be there to backstop you, you're going to make decisions that are much different than if you have all your money at risk all the time. The best thing about the original Wall Street investment banks is every partner had all of their net worth tied to the firm, so they would make very good decisions. When that changed, less good decisions happened. And then I guess without getting too philosophical, you need to rethink how you embrace information and opposing viewpoints. Most of us, myself included, interpret and make a determination. We form an opinion on something without perfect information or without the correct amount of information. And then we go into 3 modes. We preach what we think is right. We prosecute what other people's opinions are that we may not agree with, and then we politic. We decide on an opinion, and then we try to sell other people on it. Don't do any of the 3. Approach it like a scientist, where you're collecting information, you're looking at what you know about your farm, you're listening to other people that are expressing views, some of which may be not what you believe, but embrace it. You can learn something from everybody. So the mindset is very important. And when I work with the co-ops, which obviously are a big part of the American agribusiness infrastructure, I usually start off with 2 slides to begin the conversation. The first is that the only easy day was yesterday. If there's any Navy SEALs in the crowd, you'll know that's their mantra. And it just means every day you have to start fresh. And then another quote is from John Wooden. that failure is not fatal, but the failure to change may be. So I just think that starting out with the right mindset allows you to make your operate your operation in a way that is focused on managing risk, as these gentlemen had said.
Thank you. Okay. I did take a few notes. We'll see if I can follow through. Right now, we're on our farm, we're definitely going through generational transition. My husband is retiring, and I will follow him very shortly. We have a son who has been on the farm for probably 20 years now or more. And so he's very well positioned to be that person taking over the farm for the next generation. I think this doesn't happen on all the farms, but I think we thought it was a very good way to go. How can your companies help prepare farms for this transition and to the customers for the next generation? And what factors are critical for this generational transition? Ken, would you like to start?
Sure, and I'll keep it short and sweet. So I think that, Vanessa, if I put myself in the shoes of your son and your family, so there's institutional knowledge that you and your husband have that needs to be passed along. So if you're thinking about this transition as you are going, I think there's a more effective way to keep everyone focused on what the big picture is and what the long-term plan is. So I think being very intentional. I think also, we like to avoid talking about the money issue and the investment issue and when will that change. I think it's critical because so many people I talk to, and I'll let these gentlemen weigh in, where there's one person, one kid on the farm, somebody's a doctor in Chicago, somebody's an analyst, God forbid, in New York, somebody's, obviously I live in New York. There's another is a nurse in San Francisco. How do you operate when three siblings are outside the farm, the one's in the farm, and trying to affect that financial transition? So I think just being very intentional about what's going on and how to manage that is key.
Mark?
What I would say, Vanessa, when it comes to transition, there is not a one-size-fits-all approach. I have operations at 45 years old. They have a 20-year-old son and daughter. They're already in my office saying, how can I transition some assets to them to get them going on the farm? All the way to a 70-year-old producer that may get a little awkward when I ask the question if you have a transition plan. And both those answers are okay. As I think about it, we really coach our lenders to just ask the question on an annual basis, a biannual basis. Vanessa, do you have a transition plan? Sometimes, well thought out, executed, they're working on it. Other times you kind of get a blank stare. And every time we ask that question, we get great dialogue and conversation about the future of the farm, where it's going to go. And how our association is planning for this is we actually have 3 full-time transition planners that work in our area. That's all they do. They set up transition plans for operations, and it is a huge benefit to us as we look at the transition in the egg sector today. Critical components, I always like to start with the retiring generation. They have worked 30, 40, 50 years in their operation. They have earned the right to have a stable financial income stream and financial position in retirement. As you then move to the next generation, how can we structure that so they're set up for a viable operation? How can we grow net worth quick? How can we give them an earning stream that they're capable to make the machinery and land purchases that are going to be needed to keep this operation in business? Those are really, once those are solved for, Vanessa, you really have a good base on what needs to be done in a transition plan. If there's one thing that I see missed quite frequently, a lot of operations are trying to limit estate tax, limit income tax, make sure we've solidified the title of a multi-generational farm, because that's what we're going for viability. But the crop insurance is so important. If you give an experienced agent 3 to 5 years to transition those APH or yield databases to that younger generation, there's a lot of tools to get better coverage than rather you use that shotgun approach 12 to 24 months. Put that in perspective. 2010, 11, 12, great years in agriculture, got a lot of excitement, brought a lot of young people back to the farm, Vanessa. Those operations through those transition plans that had the crop insurance component in there really shined in 2013 and 15 when we had short crops, short prices on a brand new farm. The credit factors on those young beginning farmers that really put crop insurance in their transition plan shined compared to the ones that left it out. So
That's a very good point, yeah. Matt?
Yeah, I would echo both Ken and Mark's comments. I might take a different approach. So Vanessa, first and foremost, I mean, you're not alone in this. I mean, the farm transition, period, I think is going to be really, really big here just in the next couple of years. I mean, if you look at the statistics, the average age of the U.S. farmer is 57 and a half, so let's round up and say 58. And, I think from a lending standpoint is, one, we need to, understand we've had that relationship with, let's say, your farm, other farmers that are in that phase of transitioning to the younger generation. But it's also understanding what their concerns are and what they want to see with their lender in that relationship. And so I would probably note this in 3 key buckets. One is personalization. If I look at our farm, my dad's in his mid-60s, my brother and I are back there. I want a lender that understands my operation and can personalize the insights based off of what I need. The second is data-driven insights. And what I mean by that is we just talked about the first question of the market's changing. What does Farm Credit think about the market? What does it mean to the producer? So we analyze, a lot of different economics with regard to our commodity portfolios, corn, soybeans, beef, hogs, things of that nature. But let's take it down to what those insights mean to the producer and what we see within the market. And third is the omni-channel experience. And what I mean by that is, it's hard to see with the lights, but everyone's probably office right now is a phone. And so getting access to financing, getting access to my numbers, getting access to balance sheets, everything is worked on by my phone. And so when I talk to my brother, I mean, we've got a feed mill operation as well. He can do his feed, we can do our feed rations over the phone. We don't have to be in the office. And so he could be out in the field. If I've got to, put a batch on within the feed mill, he can do it over his phone. And so same thing needs to be done with finance too, is to have that omni-channel seamless experience for the customer.
Thank you.
Well, I'm going to build slowly on here and mostly on stuff that Matt had talked about. So what we see again is from the technology side is, and you and I talked a little bit about this last night, is, this generational transition. There's somewhat, if you want to use a term like a mechanical to digital transition, and this is happening. It's been happening for decades. You can think of like precision ag in the 90s, like it's slowly trickled out. And what's really held it back from really taking on full bore is the power of the purse strings. Mark had talked about that a little bit. Every farm is different about when you transition that, but when the power of the purse is in the next generation, different decisions will be made. And I'll give some examples you're seeing now in the specialty finance. If I pick on a handful of companies, if you look at like Farm Op Capitals or ARM or Ag America Lending, like down in Florida, like they take on higher risk growers that maybe are non-collateralized, they rent a lot of their equipment. But for that risk they take on, they have a very heavy technological demand and a data demand for them. And it's not a request, it's a requirement. If you want the loan, you got to provide the data. And this is kind of that transition of like, if you're going to take more risk on, to Matt's point, I want to be able to interact with it. I want to understand my farm. I want to understand how that affects my interest rate. So this is definitely happening in ag. If you look at bigger like retail banks in like consumer commercial divisions, and look how they've spent very heavily on mobile banking and digital engagement and automation and online. Like it's across the board. And those banks that have an ag division see some of that downward pressure on them. Like how do we better interact, with our customers? And to some of Mark's point again, and Ken's as well, of like that interaction. You hear farms or retail ag banks say, "Hey, I want a relationship with the grower." And my pushback always is, okay, think about this next generation. They grew up with Amazon. They grew up with Google. There is no phone call. There is no relationship. It's very transactional. Like I go in for low cost of service at any time of day or night, and I can get my stuff. I want to interact with with my input company, with my bank, with my insurer the same way. So it's really helping these companies to say, this is what that next generation is looking at. And it's different. Right or wrong, it's definitely changing. It's different, and I kind of challenge and say, how many of us here today really know the name of our bank teller? I mean, really, I don't know. But I do see that ag will eventually, have more digital engagement, more automation, more standardization. But it's kind of a process. But it's happening, and it'll happen more as this transition fully moves over.
Well, I can tell you that it happened on our farm, and we switched companies because of it happening, because we really still desire the face-to-face, which has been very beneficial for our son, because it was a sitting down and really looking out and planning for the future, and trying to take a look at the future and being very intentional. I've heard that word. How do you get from here to there? You don't just go out and plant every year. And knowing your bottom line is obviously a really good thing, but I think relationships for us are still very important. I liked the personalization remark. Ken, it looked like you had something to add to that.
Yeah, I was just going to say, it almost seems to me that you have two parts of this, right? Celebrating, the institutional knowledge of what got you here, and as bankers working with the existing mom and pops and, the existing owners, but at the same time working and consulting with the younger generation and having that capability to understand technology and build a bridge. It's funny because building that bridge ultimately is what makes a very strong transition. And when you think about two companies merging, if they do it correctly, the management teams work together to stay on, and you sort of think about keeping that foundation strong. So that's kind of what I heard. It sounds to me, Jim, like you have more work to do. You have to consult with both the older generation and the newer generation, and then as bankers and lenders, we have to make sure that we can articulate maybe what's happening in the marketplace so that people on both sides can feel comfortable.
And the other thing that I heard from everyone, obviously, was about technology, which is why we're all here this week, and definitely something that we use on our farm to a great extent. And I think that the fact that the industry with the banking industry and the finance industry is behind more and more technology and making things more efficient. Also, I like the agility and the ability to change and along with what's happening. I think we actually have a few minutes if there are any questions from the audience. Is there anyone who wants to step up or send in a question? I can't see you, so. Oh yeah, they're out there. You're kind of quiet now. I was really glad to hear all the conversation before we started, because I didn't know if we'd have an actual live audience this morning after seeing the fun everyone was having last night. But you're pretty lively this morning. Is there anything that any of you would like to add to this, and advice or places that you're going with, like some of these new generation farmers coming in?
I might start, and Vanessa, I mean, you chose some keywords between all four of us, but I have a keyword that it kind of struck in my mind, and it's being intentional. And what I mean by that is, I think this preparing the next generation is going to be a challenge with everything within the supply chain, whether it be financing, inputs, production, agriculture. And, I see Ronnie, when he got up here, he gave awesome remarks. And, that's who we need to cater to. And it's understanding what the farm has done for generations, but then also understanding what their needs are. And that transition's difficult. And the best transitions that I've seen, ours included, we went through a successful transition and still ongoing, but it's being intentional in having those hard conversations. And having those hard conversations is not just necessarily with your family. It's people that know your numbers. Numbers are everything with regard to financial performance of your operation. The lender plays a key role in that. And so having that kind of nonpartisan, non-biased, kind of just here's what the numbers are showing you, here's the economic health of your operation, I think is going to be key. But Vanessa, it comes back with that key word that you said, intentionality. It's going to be key.
Yeah, intentional is one of the words that I picked up, plus the fact that you have people that help with transition planning, to me is just phenomenal.
Huge.
Yeah, I was going to make a comment. When you brought up the question of for this panel and generational transition, I used to work in the wine industry, and we'd be all over the world with wineries, and I can remember this winery in Spain. I don't speak much Spanish, much better with French, but I can listen and nod my head and pick up a few words. But it was the older grandfather and the younger son, and we had just mapped this vineyard, a Chardonnay hillside. And at the bottom, there was like a fenced area, and there was some other plants growing there. And I asked the son, I'm like, what's your dad talking about? And he's like, he's saying, he's looking at our maps, and he's like, all the sandy soil that's found in this corner down here, it's why they don't put Chardonnay grapes, because it doesn't do well on that. That's why they put potatoes down there. And I was like, and he's like, I never knew that. I always wondered why we just fenced this area off, but Dad knew that. And he's like, it's that transitional knowledge of like, we did things for a reason, and now they have this kind of digital footprint now that he really can understand, and now that next generation can take that. But without this kind of data, you lose some of that. There's an oral tradition, but you lose the ability to understand why that was done. And that always struck with me, like, that's why we do this stuff. But
Exactly.
So Vanessa, I can ask the audience. If they don't answer, I can ask you. So how many professional farmers are there in the room? Okay, there are a few hands going up. Okay. What do you need from your lender? What do you need from your, how many non-professionals? Maybe I should ask that. How many farmers are there in the room? But I also think, what do you need from your lender? And Vanessa, what do you think is needed? Meaning that if you're going to run a farming business, and obviously from the accent you can tell I don't exactly come from farming, but if you're going to run a multi-million-dollar business that requires input purchases and purchases of equipment, it would just strike me that, do you need a CFO course? Do you need training on, risk management? On any given day, I wake up and think about what goes into commodity market pricing. You guys probably do the same. Here's the list for me, and I'm not even farming. Russia, Ukraine, China, buying, selling, canceling orders, not canceling orders, hedge funds, long, short, commodities, interest rates, yield curve. What's the Fed going to do next? What's happening with government debt to GDP? Is the government going to default? You want to know why farmer sentiment was low? Well, once again, Washington is making everyone anxious, right? So this is some of the list, and then you think about just trade tensions, tariffs. I mean, the list of macro factors is about 15 pages long. But what does the farmer need? Does the farmer need to have a better understanding of how to manage his or her finances? Wondered, is that something that you think lending?
Well, I think all of those courses and the fact that, if you have a good relationship with your lender, and if you have a market consultant, you are being made aware of some of these different things on a daily basis. And I think, there's so much out there to read, and so little time to read it. It's you think we could sit in our tractor and read all the way up and down the field, but there's other things going on, and so you really kind of get caught if you think you can try to do that. Being a farmer means that you need to be a mechanic, you need to be an economist, the list just goes on, and so having some learning and education in all of those areas is very important.
I always wondered, from a farm credit system, should we have just a series of master classes, and not that we're the experts on everything, but perhaps a collaborative situation where, understanding the finances of, applying for a loan and managing, finances. I also think technology, there's probably an opportunity for us as Farm Credit to, help be the interpreter, if you will. Maybe that's a wrong word, but.
We have young beginning farmer committees and different meetings that take place throughout the association, coaching on a lot of what you just said, Ken, because producers, they have to wear a lot of hats. They need to know general understanding about a lot, but the most successful, when you get into some of these very large operations, they have experts in almost every field, and they've developed trust with them. So they might have a general understanding, but when you get into the weeds on making some of these tough decisions, they make sure they have an expert to lean on, whether it's feed ration or debt structure or an agronomy decision. You really do need to seek out experts in the fields to help you along the way. To Ken's point, you brought up early on when we were talking about farm transition. So one of your sons or daughters wants to be the producer on the farm. Another one's a lawyer. Another one's a doctor. Land values have just doubled in the great state of North Dakota, adding a lot of asset value to farm balance sheets. Best recommendation to that is what is fair might not be equal, because the cash flow ramifications on trying to pay for a farm twice with these asset values are pretty tough. So to answer your question, Ken, a lot of thought process goes into that in each one of these decisions as we make. So
I always wonder when you think about the return on the farm and then the cost to buy out the brothers and sisters, the math doesn't work. So I think that in a rising environment, so clearly, the transition issue, I think that's probably something as a lender that we can add a lot of value on, just helping square the triangle.
Vanessa, I would add one more thing. With your comment on education, markets, things like that, one of the value propositions we have at FCSA and Frontier is we have an intentional customer success team. And what that value proposition goes into play is, our mission statement, one of the key pieces is we are experts. But we want to transition that and make that accessible to the customer. And we've got a dedicated team that they do customer success. They do, there's a series called Two Economists and a Lender, and customers have access to those presentations and that knowledge. And so we're intentional about it. We take it very seriously because, again, we are in the lending business, but we're also in the education business as well.
Yeah, very important. And the transition, to me, cannot start too early. It might need to be changed many times throughout the years, but I think the earlier that a farm gets started on transitioning to the next generation and seeing what changes need to be made over that and is very important. I like all the education opportunities and all the the opportunities for advice from professionals. I think as farmers we need to be open to that. We need to be open to have an agronomist, somebody in marketing, somebody in finance, and have them as part of your team, and make up a team for your farm that you can work with.
So it's interesting because we talk about innovation of equipment and precision, but this innovation is called the Expert Farming Network. Jim, maybe we should start a company right after this. And again, but I would ask, both older and younger, could that add value? It seems to me your son might benefit from having knowledge of the trickiness of getting a loan and getting crop insurance. I studied insurance for many years. Crop insurance can be an enigma to anyone, even professionals. So you just wonder if that's an opportunity, again, to better engage. And again, another lesson I learned along the way is everything starts with a conversation, and a conversation to build trust, to then provide thought process and being able to test that.
Yeah, and I love hearing the educational aspect. I used to work for Ohio State University, the Ohio State University Extension. I can't forget that. I almost got in trouble.
The extension of Ohio State University.
That's right. And our mission is education and providing, data-driven services. They've maybe lost their way a bit, I guess, from an organizational standpoint. But the education side, for us as a company, we're out. Our goal is to help empower all of them to do their job to service you. That's what we want to do, is provide, empower them to make decisions and provide data that helps you make better decisions. And ultimately, both parties win. So I've been very encouraged and excited about that, because I think that's such a core part of, from the science standpoint, but from the delivery standpoint, that people don't want to be sold, they want to buy, but they also want to understand. If you can help them, advisor to the farmer, that's, so it's a great place to be.
Yeah, and Ken, to your point, adding an insurance agent to your team is very important. Throughout the years, the different changes, and you need to be right on those changes. So
I've said for years and years that AgTech needs a geek squad, and I go back to everyone over 45 will relate to this. 1992, the internet came about, right? It was there before, but it was commercial. Personal computers weren't in everyone's home in 1992, so Best Buy created the Geek Squad to help people like me and my wife understand actually how to operate and go onto the internet. The lesson is not lost, because smart people may not have expertise in one area, but if they have that ability to get the expertise, they'll pay for it, and then they'll embrace it. So I think maybe ag needs a geek squad. Maybe I'll change the thesis a little bit. Not just ag tech, but ag. But I'll defer to those that really know about farming.
Well, thank you, and I think that'll be the last word on the panel, because we've hit 9:40 and we're trying to keep to time.